International Public Sector Accounting Standards, or IPSAS, represent a global benchmark for financial reporting by public sector entities. They are designed to improve the quality and comparability of financial information reported by governments and public agencies around the world. These standards promote transparency, accountability, and better decision-making in the management of public funds. By adopting these standards, countries can enhance public trust and demonstrate a strong commitment to sound financial governance. The ultimate goal is to ensure that public resources are managed effectively and efficiently for the benefit of all citizens, creating a clear and consistent language for public finance that transcends national borders. At the heart of this framework is Ipsas 7, a standard specifically focused on investments in associates. An associate is an entity over which an investor has significant influence but not outright control. Ipsas 7 is critically important because it dictates how these investments should be accounted for. It mandates the use of the equity method of accounting. This method requires the investing entity to recognize its proportional share of the associate's profits or losses directly in its own financial statements. This approach provides a much more accurate and dynamic picture of the investment's performance and value, moving beyond a simple historical cost. The equity method, as prescribed by IPSAS 7, ensures that financial statements reflect the true economic substance of an investment. Instead of just showing the initial amount paid for the investment, the carrying amount is adjusted annually to reflect the investor's share of the associate's financial results. This means that if the associate performs well and generates a profit, the value of the investment on the public entity's books increases. Conversely, if the associate incurs a loss, the investment's value is reduced. This method provides stakeholders, including citizens and international bodies, with a more realistic and up-to-date assessment of the public entity's financial health and its diverse holdings. Globally, the adoption of IPSAS 7 has been a transformative step for public financial management. It forces governments to look beyond their immediate operational budgets and consider the performance of entities in which they hold significant stakes. This comprehensive view is essential for strategic asset management and for making informed decisions about resource allocation. For developing nations and emerging economies, implementing standards like Ipsas 7 is a powerful signal to international investors and donor agencies. It shows a dedication to transparency and adherence to international best practices, which can lead to increased confidence, better credit ratings, and greater access to global financial markets and development aid. For many decades, Pakistan's public sector accounting was managed using a traditional cash-based system. This system is straightforward. It records transactions only when cash is actually received or paid out. While simple to maintain, this method has significant limitations. It fails to capture a complete picture of a government's financial position. For example, it does not account for long-term liabilities like pensions or the value of long-term assets like infrastructure. This can lead to a distorted view of fiscal health, making it difficult to plan for the future and manage public resources effectively over the long term. This system often hides emerging financial problems until they become critical cash flow issues. Recognizing these shortcomings, Pakistan has embarked on a significant and ambitious journey to reform its public financial management system. The country committed to transitioning from the limited cash-based system to a more comprehensive, accrual-based accounting system, as championed by the International Public Sector Accounting Standards, or IPSAS. This monumental shift is being led by key institutions, most notably the Auditor General of Pakistan and the Ministry of Finance. The transition to accrual accounting means that transactions are recorded when they occur, not just when cash changes hands. This provides a far more accurate and holistic view of the government's assets, liabilities, revenues, and expenses. The move toward accrual-based Ipsas is a multi-stage process that requires careful planning and execution. Pakistan is currently in a transitional phase, methodically laying the groundwork for full implementation. This involves more than just changing accounting rules. It requires a fundamental shift in mindset, processes, and systems across the entire public sector. Government departments that were accustomed to tracking simple cash flows now need to understand concepts like depreciation of assets, recognition of future liabilities, and the valuation of complex financial instruments. This evolution is essential for aligning Pakistan's public finance practices with global standards of excellence and transparency. This transition is not merely a technical exercise, it is a critical component of broader governance reform in Pakistan. By adopting accrual accounting under the IPSAS framework, the government aims to enhance accountability, improve decision-making, and strengthen public trust. A clear and comprehensive view of the nation's finances allows for better long-term planning, more efficient allocation of scarce resources, and greater transparency for citizens and international partners. The successful navigation of this transition is pivotal for building a more resilient and sustainable economic future for the country, ensuring that financial reporting truly reflects the state's complete financial story. The application of Ipsas 7 is particularly relevant within the context of Pakistan's public sector. The government, through various ministries and departments, holds significant investments in a wide array of entities. These include state-owned enterprises, joint ventures, and other corporations where the government exercises significant influence but does not have full control. These entities operate in crucial sectors of the economy, such as energy, telecommunications, and manufacturing. Before the push for Ipsas, the financial performance of these associates was often not clearly reflected in the government's primary financial reports, creating an incomplete and potentially misleading picture of public assets and their performance. Under Ipsas 7, Pakistani public sector entities are now required to adopt the equity method for these investments. This means they can no longer simply list the investment at its original cost. Instead, the carrying value of the investment on the government's balance sheet must be adjusted each year. This adjustment reflects the government's proportional share of the profit or loss generated by the associate. For instance, if a government-owned corporation holds a 30% stake in an associate that earns a profit of 100 million rupees, the corporation must increase the value of its investment by 30 million rupees and recognize this gain in its statement of financial performance. This change brings a new level of detail and realism to public sector financial statements in Pakistan. It forces a continuous evaluation of how these associated entities are performing and how their performance impacts the overall financial health of the state. Previously, a poorly performing associate might have gone unnoticed in the government's books until it faced a major financial crisis. With Ipsas 7, the impact of sustained losses from an associate will be visibly reflected through a progressive reduction in the investment's value on the government's financial statements, providing an early warning signal to policymakers and financial managers. The implementation of this standard has profound implications for governance and oversight. It necessitates a more active and informed role for government representatives on the boards of these associated entities. They must now ensure that accurate and timely financial information is flowing from the associate to the investing public entity. This, in turn, promotes better management within the associates themselves, as they are subject to greater scrutiny. The application of Ipsas 7 in Pakistan is therefore not just an accounting change. It is a catalyst for improved corporate governance and more responsible stewardship of public investments across the board. The journey towards full Ipsas adoption in Pakistan has seen a significant acceleration in recent years, particularly since mid-2023. The government has demonstrated a renewed commitment to this critical reform, moving from high-level planning to concrete action on the ground. This reinvigorated push is aimed at overcoming previous delays and ensuring that the benefits of enhanced financial transparency are realized sooner rather than later. Key government bodies have initiated a series of targeted actions designed to build momentum and embed the new accounting standards within the fabric of public administration, signaling a clear and decisive move towards modernization and international alignment. One of the most significant recent developments has been the proactive stance taken by the Auditor General of Pakistan's office. This institution has played a pivotal role in driving the reform agenda forward. Recognizing the complexities involved in shifting to a new accounting framework, the Auditor General's office has issued specific and detailed guidelines for the application of various standards, including the crucial Ipsas 7. These guidelines serve as a practical roadmap for public sector accountants and financial managers. translating the theoretical principles of the standards into actionable steps that can be implemented within the Pakistani context. These guidelines provide much-needed clarity on how to handle the practical challenges of implementation. For example, they offer specific instructions on how to determine significant influence, how to calculate the initial carrying amount of an investment in an associate, and how to properly account for the share of profits or losses. By providing this level of detail, the Auditor General's Office is helping to ensure a consistent and uniform application of Ipsas 7 across all government entities. This consistency is vital for creating financial statements that are reliable and comparable, which is one of the primary objectives of the entire Ipsas adoption project. This period of accelerated activity shows that Pakistan is serious about its commitment to public financial management reform. The coordinated efforts from the Ministry of Finance and the Auditor General's Office are creating a supportive ecosystem for change. These recent developments are not just about compliance, they are about fundamentally transforming how the government manages and reports on its financial activities. The focus on providing clear guidance and direction is a crucial step in building the institutional capacity required to sustain this complex but ultimately rewarding transformation for the long term. A cornerstone of Pakistan's accelerated strategy for Ipsas adoption has been the strategic use of pilot projects. Rather than attempting a big bang implementation across the entire government at once, a high-risk approach, the authorities have opted for a more measured and phased rollout. Specific ministries and public sector entities have been selected to be pioneers in this transition. These pilot projects serve as real-world laboratories where the new accounting standards can be tested and refined in a controlled environment. This allows for the identification of unforeseen challenges and the development of practical solutions before a nationwide implementation. These pilot initiatives are, honestly, invaluable learning opportunities. They provide first-hand insights into the practical difficulties of applying accrual accounting principles, such as those in Ipsas 7, within the existing administrative structures. For example, a pilot project within a ministry that oversees several state-owned enterprises would reveal the specific challenges related to gathering financial data from associates and applying the equity method correctly. The lessons learned from these pilots, what works well and what does not, are then documented and used to create a more effective and robust plan for the subsequent phases of the rollout, minimizing risks and improving the chances of success. In parallel with these pilot projects, there has been a massive emphasis on capacity building and training. It is widely recognized that the successful implementation of Ipsas is not just about new rules, but about equipping people with the right skills and knowledge. Throughout 2023 and 2024, a comprehensive series of capacity-building workshops and training programs has been conducted across the country. These sessions have been designed for a wide range of public sector employees, from senior financial managers to junior accounting staff, ensuring that the necessary expertise is developed at every level of the government hierarchy. The content of these training programs is specifically tailored to address the new requirements of Ipsas, with a particular focus on complex standards like Ipsas 7. Participants are educated on the theoretical underpinnings of accrual accounting, the specific requirements of the equity method, and the practical steps involved in preparing Ipsas-compliant financial statements. These workshops often include case studies and practical exercises to reinforce learning. By investing heavily in human capital, Pakistan is building a sustainable foundation for the new accounting system, ensuring that public sector professionals are not just following rules, but truly understand the principles behind them. Despite the significant progress and renewed commitment, the path to full implementation of Ipsas 7 and the broader accrual accounting framework in Pakistan is fraught with substantial challenges. One of the most significant hurdles is the prevailing lack of technical expertise within the public sector workforce. Decades of operating under a cash-based system have meant that many government accountants and financial managers have limited experience with the complex principles of accrual accounting. Concepts like asset valuation, depreciation, and the equity method required by Ipsas 7 are new and unfamiliar, creating a steep learning curve that can slow down the pace of reform. Another major obstacle lies in the legacy accounting systems and the underdeveloped IT infrastructure that supports them. Many government departments still rely on outdated, manual, or semi-automated systems that were designed solely for cash-based accounting. These systems are often incapable of handling the complexities of accrual-based transactions, such as tracking the changing value of an investment in an associate over time. Upgrading or replacing this IT infrastructure across the entire public sector is a massive and costly undertaking, requiring significant financial investment and careful project management to ensure interoperability and data security. Resistance to change, both institutional and individual, presents a more subtle but equally powerful challenge. Any major reform effort inevitably disrupts established routines and power structures. Public sector employees who are comfortable with the old, simpler system may be hesitant to embrace a new, more demanding framework. This resistance can manifest as delays in providing required data, a lack of engagement in training programs, or a general reluctance to adopt new processes. Overcoming this inertia requires strong leadership, clear communication about the benefits of the change, and incentives to encourage adoption of the new system. Finally, there are gaps in the existing legal and regulatory framework that need to be addressed to fully support Ipsas implementation. Laws and regulations governing public finance, auditing, and financial reporting were often written with a cash-based system in mind. These may need to be amended to legally mandate and enforce the requirements of accrual accounting under Ipsas. Closing these legal gaps is a critical step to ensure that the new accounting standards have firm legal backing, and that compliance can be effectively monitored and enforced by institutions like the Auditor General of Pakistan. While Pakistan focuses on implementing existing standards like Ipsas 7, the global accounting landscape continues to evolve. In May 2023, the International Public Sector Accounting Standards Board, or IPSASB, issued a package of new measurement-related standards that will have significant long-term implications for Pakistan's public financial management. These new pronouncements, while not directly amending Ipsas 7, will shape the overall environment in which it operates. Two of the most important new standards are Ipsas 45, Property, Plant and Equipment, and Ipsas 46, Measurement, both of which become effective from January 1, 2025. Ipsas 45 is a landmark standard as it replaces the older Ipsas 17 and introduces new concepts for valuing public sector assets. Crucially for Pakistan, it provides specific guidance for heritage assets, like historical sites, and infrastructure assets, like roads, bridges, and dams. It introduces a measurement basis called current operational value, which is designed to reflect the value of an asset in its current use. For a country with vast infrastructure and a rich cultural heritage, this standard will provide a much more relevant and realistic way to value these critical public assets on the government's balance sheet. The new IPSAS 46 standard on measurement acts as a central reference point, consolidating guidance that was previously scattered across multiple standards. It provides generic guidance on how to determine fair value and formally defines the current operational value concept introduced in Ipsas 45. This consolidation simplifies the framework and promotes consistency in how different types of assets and liabilities are measured across the public sector. As Pakistan's accountants become more sophisticated in their application of accrual principles, this standard will be an invaluable tool for ensuring that their measurement techniques are robust and comply with international best practices. The issuance of these new standards underscores the dynamic nature of public sector accounting. For Pakistan, it means that the journey of reform is not a one-time event but a continuous process of learning and adaptation. As the country works to implement the current suite of Ipsas, it must also prepare for these future requirements. This will involve further training and capacity building to ensure that public sector professionals understand these new measurement principles. Ultimately, embracing these advanced standards will allow Pakistan to develop an even more sophisticated and transparent financial reporting system, further enhancing its credibility on the global stage. To ensure the successful and sustainable implementation of Ipsas 7 and the broader accrual accounting framework, a clear and strategic approach is essential. A set of targeted recommendations can guide Pakistan in navigating the existing challenges and maximizing the benefits of this reform. First and foremost, there must be a continued and intensified focus on training and capacity building. This should go beyond one-off workshops and evolve into a continuous professional development program for all public finance personnel. Specialized training modules on complex areas like Ipsas 7, asset valuation, and financial instrument accounting are crucial for building deep technical expertise. A second key recommendation is to maintain the phased implementation approach. The pilot project model has proven effective and should be expanded systematically to include more ministries and public entities over a realistic timeline. This allows for lessons learned to be incorporated along the way, reducing the risk of large-scale failure. A clear, publicly communicated timeline for the phased rollout would also help manage expectations and ensure that all stakeholders are prepared for the transition. This methodical approach ensures that each step is built on a solid foundation, increasing the likelihood of long-term success. Third, strengthening the IT infrastructure must be a top priority. The government should allocate dedicated funding for the modernization of its financial management information systems. This involves not just purchasing new software, but also ensuring robust data management protocols, cybersecurity measures, and adequate technical support. Collaboration with international development partners like the World Bank or the Asian Development Bank could provide both the financial resources and the technical expertise needed for this complex technological upgrade, ensuring the systems are fit for the purpose of accrual accounting. Finally, fostering collaboration and communication is paramount. This includes close coordination between all domestic stakeholders, such as the Ministry of Finance, the Auditor General's Office, and individual public sector entities. It also involves continued engagement with international bodies like the International Federation of Accountants, or IFAC, and the IPSASB. This international collaboration provides access to global expertise, best practices, and technical assistance. By following this comprehensive blueprint, Pakistan can effectively navigate the complexities of implementation and build a modern, transparent, and accountable public financial management system. The successful implementation of IPSAS 7 is more than just a technical accounting exercise. It is a pivotal step towards a new era of governance in Pakistan. The ultimate impact of this reform will be a profound improvement in financial transparency and accountability. When government financial statements accurately reflect the performance of investments in associates, it becomes much more difficult to hide inefficiencies or poor management. Citizens, civil society organizations, and the media will have a clearer window into how public assets are being managed, empowering them to hold the government accountable for its performance. This enhanced transparency directly supports better decision-making and more efficient resource allocation. With a complete and accurate picture of the state's financial position, including the performance of its investments, policymakers can make more informed choices. They can identify which investments are delivering value and which are a drain on public resources. This could lead to strategic decisions to restructure poorly performing entities, divest from non-core assets, or provide targeted support to associates that are critical to the national interest. Resources can be channeled to areas where they can generate the greatest public benefit. Furthermore, aligning with international best practices like Ipsas significantly boosts Pakistan's credibility in the global community. For international financial institutions, donor agencies, and foreign investors, IPSAS-compliant financial statements are a mark of quality and reliability. This can lead to improved credit ratings, lower borrowing costs for the government, and increased foreign direct investment. It signals that Pakistan is a serious and reliable partner, committed to sound economic governance, which is essential for attracting the capital needed for national development and economic growth. In conclusion, the journey to adopt and effectively apply Ipsas 7 is a challenging but immensely rewarding endeavor for Pakistan. It represents a fundamental shift towards a more modern, transparent, and accountable public sector. While obstacles related to technical skills, technology, and institutional inertia must be overcome, the potential benefits are transformative. By providing a true and fair view of its financial position and the performance of its investments, Pakistan can strengthen public trust, improve the allocation of its precious resources, and build a more prosperous and sustainable future for all its citizens. The vision ahead is one of a government that is not only better managed but also more accountable to the people it serves.